Hello, everyone, and welcome to the Smart Investor Podcast. Okay, what a hectic start of the week. We did have a scare last week in the stock market as investors started to panic when we had those multiple down days, but the market seems to have made some recovery early this morning. Okay, what we're going to speak about briefly is the situation in the eurozone and the crisis, quote unquote crisis, that was averted. We're going to analyze the different markets, the S&P 500. We're going to look at the Dow, the FTSE, the German DAX. We're also going to take a look at the US dollar, and we're going to do an in-depth analysis of gold to see what is happening in the gold market, because there is quite a lot of interest in what is happening in the gold market. And the best way to see and to get greater clarity as to what is happening in the market is just to actually look at the chart and see what is happening. Okay, first let's speak about the fact that the Eurozone and Greece did come to some agreement, some bailout agreement. And while I don't normally focus on economic issues in this podcast, because our main focus is to look at what the market is actually doing and look at profitable opportunities and profitable setups in the market. This is of some importance. So there was some quote unquote agreement with the Eurozone and Greece, and the reaction of the euro so far has been negative. So the US dollar is strengthening on the news that happened this morning. We have to see if this, because what has been happening in the last couple of trading sessions, are essentially since March, the market has been in a consolidation, meaning it's moving sideways. For those of you who don't know the history of what's happening, is that between the dollar was in a decline in the first part of 2014, and what we saw was between June, the dollar topped out in May. Well, the euro topped out in May and declined steadily against the dollar from May 2014 to March 2015. The market bottomed out and has been in a consolidation pattern ever since. For those of you who are looking at the actual chart, this is a chart of the euro versus the US dollar. And what you can see is a pretty significant decline in the euro. And when the euro is declining, that means the dollar is increasing in strength. Taking a look at the US dollar index at the time, we see that on the chart here, we see the dollar bottomed in May and then went on to post a massive rally between May and March 2015. And those of you who are long the dollar and had assets that were long dollar assets did very well from that period. And if you want to take a look at the charts that I'm speaking about, go to smartinvestorcentral.com and you click on the video market analysis, and you can see exactly what we're speaking about. Okay, so the market was in a consolidation pattern, and now it looks like the US dollar could be increasing again to challenge the old high that was made in March earlier this year, near that $100 level on the US dollar index. Okay, so that is what is happening with the US dollar. And I know there were a lot of predictions that the dollar was going to collapse last year, but what we have seen was in the last couple of months is actually a strengthening US dollar. And that's one of the reasons why sometimes it's not good to pay attention to the news media and and allow fear to creep into your investments. It's always good to see what the market is actually doing, as opposed to following the media hype and the market moves in the opposite direction. And what I find, just looking at the media, and you have to understand, a lot of investors get their information from the likes of CNBC, Bloomberg, and these mainstream media outlets, Wall Street Journal, etc., etc. A lot of what they publish normally, in terms of market analysis, the market often moves the exact opposite of what the mainstream consensus or the mainstream thinking is. And that's one of the reasons why investors find it hard to make consistent gains in the markets. Yes, they may be up a year or so, but there is no consistency to the gains, because we're following the mainstream media and not what the market is actually doing. Okay, taking a look at the S&P 500, we see that the market bounced today and is up on the day. The market has not closed as of yet. We're about 10 minutes until the market closed, and the market is up, and it's approaching the 2099 region. But let's see what happened in the S&P 500. The market came down to an area of support. The market is in a broad channel. The market came down to the high that was made was in near the 2140 level. The market came down to an old low near 2040. And what we found was that this support held, 2040 support. The market meandered in the channel, and this support held, and the market is now bouncing from that area of support. But that averted a lot of the panic on Wall Street here. But bear in mind what is happening. The market is now approaching once again the all-time high that was made in the S&P 500, and this all-time high was made in mid-May, and on the S&P 500 index, that's at 2134. Okay, so at 2134, the market is now at 2099. The market could be attempting to take out that 2134 high that was made in mid-May. So we could see a return to the all-time high. So it would be interesting to see the reaction of the prices at that high. If we see that price action stalls out and we get another sell signal, then that will open up once again the 2040 low. If we see the prices pierce through that 2136 level, that will be good for the bears. So the question as to what the market is doing, the market is still in a holding pattern. It's not bullish, it's not exactly bearish. It's very neutral at this time with a slight bias to the upside. But as I said, if we return to the 2040 area and the market pierces below 2040, then we could see heavy selling in the S&P 500. Okay. The chart of the Dow Jones Industrial Average looks similar to S&P 500. And remember, the S&P 500 is a broader index, and it's for stock market direction. It's good to look at the S&P 500 because it's 500 companies as opposed to the Dow 30, which is 30 companies. Okay. So the Dow bounced out of the 17,000. Looks like it was going to break down, but the market made a low of 17,465 and rallied, and has been rallying up to 17,977. Remember that the all-time high in the Dow is at the 18,351 level. So we may see the market challenge that high again. And it's a similar situation with the S&P 500. If the challenge of the high fails, then it will return pressure to the downside and to the 17,600, 17,400 level. And if we break down below those levels, then it could issue in a wave of selling in the Dow Jones Industrial Average. Taking a look at the Nasdaq chart is slightly more positive than the Dow or the S&P 500, but the market is once again approaching the all-time high, the high that was made of the year, and that is at 4,500. Actually, it's 4,562. That's the all-time high that was made, and that was made back in mid-April for the Nasdaq. Okay, so the Nasdaq remains slightly bullish, and the key area to look out for in the Nasdaq is this 4,300 level. A break below 4,300 will open up the 4,100 level, and a break below 4,100 will be fairly bearish for the market. Heading over to Europe, let's take a look at the German DAX, and the market is up on the day, having pulled back somewhat from the all-time high that was made in April. And the chart of the German DAX, we have a series of lower lows and lower highs in the medium term, which could be very worrisome. For the bulls to gain some momentum or to gain more confidence, we need to see a close over the 11,600 level in the German DAX. That will definitely open up the market to challenge the all-time high near that 12,400 level. Moving on quickly, let's take a look at the FTSE over in London. We see the FTSE having a fairly significant pullback, but the market is also up on the day, finding support near the 6,400 level and now closing at 6,673. And the FTSE chart is fairly troubling, because what we could be seeing on this chart is a double top, and a double top is a very bearish pattern in chart analysis. And if we do get a confirmation, if we see a close below the 6,000 level in the FTSE for the long term, that could be very bearish and will open up the downside of the FTSE. So this chart is not looking very good for the UK FTSE, and we'll certainly be keeping an eye out on it. Earlier in the year, I spoke about the FTSE and the fact that if the market does not definitively pierce the 7,000 level and close above the 7,000 level, it could be in some trouble. Okay, now before I come off of equities, let's take a look at Apple, because folks were saying that Apple was in a mini crash or a mini decline. I mean, the all-time high that was made in Apple was at 134.54. The market declined to the low was 121.21 and is now at 125.61. Yes, it had a pullback, but it was nothing much to panic about. The key level in Apple is at 120. If we do close below 120, that will be fairly bearish, and that could issue in further selling. And if we close below 105, that will be very bearish for Apple. So although we're still in a broad uptrend with Apple stock, it's definitely at a point where you need to keep an eye out on what's happening in the markets. And we are approaching this July-August region that sometimes can be very tricky for the markets, and we see sometimes some trend reversals into this July-August period. So be very cautious at this point in time, and if I was saying, now is the time to keep an eye on the market, because we could be in for some reversals if some key technical levels are taken out. Okay, looking at the crude oil market, and we see that crude made a recovery into May, but is now declining again into the $52 region. That is fairly good for consumers who should get some further reprieve at the gas pump, because we were seeing the prices creep back up, but we did find resistance in the $60 region, and we're now falling again. It will be interesting to see if oil does take out that low that was made in March there and close below that $40 level. It will be very interesting. Now, let's take a look at gold and what's happening in gold. Now, the gold market, a lot of folks are very interested in investing in precious metals. A lot of folks have also lost a lot of money in precious metals over the last couple of years, because we saw that gold made an all-time high in July to September of 2011, and ever since that high was made, the market has been on a series of lower lows and lower highs, lower lows, lower highs. So folks who have been buying into these lows and trying to catch the bottom has just seen gold go down and down and down. Now we're at a point, and I have the chart up for those of you who are watching the video market analysis. And again, if you want to see the video market analysis, go to smartinvestorcentral.com/ and look at video market updates, and you will see the video market analysis. Okay, so we're in what they call a consolidation pattern, and as you can clearly see here, and the market is challenging the base of a triangle. Picture a triangle for those of you who are listening to the podcast. Picture a triangle, and the market is moving in a downtrend, and the market is now challenging the base of this triangle. And if we do get a close below this 1150, 1140 region, that would be bearish for gold, and we could see further declines. So my analysis of gold is that the market is still under some pressure. It's still bearish in the gold market here, and at some point gold will turn around. At some point I am forecasting that the market will start going back up again, but this point has not occurred just yet. I haven't seen any confirmation of that just yet. So in trading this and in investing, they say don't catch a falling knife. So gold is now falling, and it can be dangerous to be catching this falling knife. So just to reiterate, my analysis is that gold could see some further declines, and now is not the ideal time to be buying gold. Okay, so for tomorrow, we're looking to see if the strength returns in S&P 500, and if we do get some follow-through selling, which will be fairly bullish. And we are going to see how the market reacts around the all-time highs that were made back in May. Okay, so I hope you all enjoyed the podcast. And remember, you have to keep an eye out on what's happening in the markets, because the mainstream, normally when large declines occur, the decline is well on the way before the mainstream media picks up that we're in a decline. And listening to podcasts such as this, following the video market analysis, you'd always get the most up-to-date information on what is actually happening with prices in the markets. Because remember, prices are the ones that dictate what's happening in the markets, and not gurus on television. Okay, so for more information on how to get the market analysis, go to smartinvestorcentral.com, and you can get more information. And if you would like information on how to diversify your investing portfolio and prepare yourself for investing in the new economy, in the new economic environment, in a better diversified approach, you can go to smartinvestorcentral.com and check out the resources that we have there. Okay, thank you very much for listening, and I hope you have a wonderful evening. Thank you.